His company compiles high-frequency data on the freight market for customers trying to navigate it. Joining us now is FreightWaves CEO Craig Fuller. Craig, no, we see you during the pandemic. Now we see you during this. We only see you when things are like seizing up and going really poorly. Please do tell, and we heard the Treasury Secretary reference this the other day, what's going on with activity at the ports and so on?
Yeah, there's been a collapse of outbound freight out of China into the United States. It is really dark times for ocean shipping especially, but it's starting to actually show up in domestic markets. To your point, people bring me out when we have a crisis. People oftentimes don't think about the supply chain unless something's breaking. And we're certainly looking at similar conditions to what we saw in early COVID.
What are the differences? In other words, no one's hoarding toilet paper right now, as far as I know.
No, there's no toilet paper crisis, and we don't anticipate a toilet paper crisis this time around. But you are looking at softness that's showing up. There's so much uncertainty. This is slowing down investment. So that is slowing down companies making capital investments. That slows down freight. Supply chain shortages will probably show up sometime in late June, July. And I think when consumers will feel it, will be most likely back to school when they go to the stores and don't find the items that they're used to buying for back to schools, when those will start to get pinched.
With that chart we had a moment ago didn't look like a disaster. You know, it kind of had a crest and then a low point in 2023, and we're kind of back. You know, it doesn't look like a disaster, but when you hear the individual stats where it says, you know, Port of LA traffic down 40% or whatnot, can you give us some context around where we're seeing the biggest declines, but where things might still be pretty steady?
Yeah, so this data is a lagging indicator. It's a 14-day lagging indicator. So when you're showing that data, you're actually not getting sort of the real time on the ground. What we are seeing, you know, if you put this in perspective, during the height of COVID, sort of May of 2020, when China had shut down its economy and the U.S. was on lockdown, we saw the international container lines cancel 50 voyages to the United States. And what we've already seen is over 90 voyages have been canceled just to the lack of cargo. And so this is a situation where we are seeing COVID-like conditions at the extreme, but really caused by tariff uncertainty and tariff stress. And it's not yet showing up in the domestic economy at an extreme level. The freight companies are seeing it. But we do anticipate, as we move into late May and June, particularly in Southern California, is 500,000 jobs may be at risk due to the lack of imports.
So, and obviously this will all depend on what happens at the top level. If there's some sense of, you know, a deal, maybe things restart. There's kind of two things also happening here at the same time, Craig. One is just this, you know, the embargo is the word that Besant used, this trade kind of stop with China. The other is kind of just American businesses facing uncertainty about their investment. And so you've picked up on kind of both of these veins, right? Mm-hmm. So we've talked about what's happening at the ports. What are you picking up on just in terms of kind of typical freight activity around the country right now?
Well, I think everybody's paralyzed. I mean, we talked to some of the largest freight companies in the world, and what they're telling us is their customers, people that are shipping, these are major multi-global companies, feel it reminds them a lot like COVID. There's so much uncertainty, and nobody knows what the rules of engagement are, what's going to happen. And so it's just paralyzing everybody. So companies are simply not making investments. They're afraid to take on too much inventory. They're stopping shipments. We've seen shipments cancel out of China. We've seen shipments cancel cross border because they don't know what the tariffs look like. We've talked to manufacturers that ordered products, machinery that takes years to build, and they don't know, have any idea on what tariffs will look like when they actually arrive. The thing that I think is often misunderstood about supply chains is there's oftentimes an importance of long lead times. So when companies made these decisions, they may have made them 2 or 3 years ago, ordered the product, and now it's ready to ship. They're not taking inventory of it. They're not shipping of it because they don't know when it arrives if there's going to be an overnight tariff increase. And we saw that with China. Is Liberation Day, we had 54% tariffs, and 2 weeks later, we're at 145%. This is something that is causing massive distress. So everybody's just on hold, not doing anything. I don't see how that benefits any of this. And I think more importantly is if you're manufacturing You want long-term capital certainty to make the investments. And because you don't know what the future looks like, there's so much uncertainty, you're not willing to make those investments. And that is showing up in the freight data. Just as a perspective, freight volumes in the United States across the trucking market are down 13% year over year. And it really started about Valentine's Day is when we started to see the collapse in volumes, just because the upstream part of the freight economy is starting to get really distressed because there is very little capital investment.
Yeah.